This is Carmel with the Financial Tea, where we talk about all things money, not people, unless it's about our money. So today, I just want to talk to you guys about a common misunderstanding when it comes to investing that I see a lot of new people make when it comes to investing. So I'm just going to read for you what this gentleman said. He said, newbies like me, remember this. If you buy a stock at 10 cents for 1,000 shares, it will cost me $100, which means every time the stock goes up by $10, you will receive an additional profit up to $100. Don't be wasting your time buying a $100 per share stock if you're buying one share. That stock will have to rise to $200 per share for you to even receive double your $100 you bought them at. Unlikely. I do believe profit is profit, but it'll really have to move for you to receive profit. If I did something wrong, like my let me know, trying to help. All right? And I did let him know. Okay? So, the first thing first is I understand where he's coming from, and this is how I responded to his message as well. I understand where he's coming from, that in essence, you do want to stock that move, period. But once again, he was correct in saying that he's new to the market, so he don't quite understand how these stocks move. You have to understand that stocks are priced for a reason. It's not like that it's just magical thing that people just put money into and then boom, you pull a lever and you just wait for the money to come shooting out. No, stocks at its fundamental core are businesses. And basically, the more profitable that a business is, the more that people are likely to invest in it. Therefore, that is what's going to lead to the stock price moving. So when you've got a 10 cents per share company, and I have a course where I go into all of these things in depth with how the pricing comes to be and etc. But nonetheless, if you have a 10 cents a share company, what's going to happen is that in essence, that price, that company is not going to move so significantly over time. I know it sounds simple because to most of us we're saying, hey, it's 10 cents. That's such a small amount of money. It's no problem for it to move to, a dollar a share or $100 a share, etc. But that is not the way that it works. One thing, when you start investing for a longer period of time, one thing you'll come to understand is that the percentage amount is what matters. That's how stocks move. It moves based on the percentage, and then the percentage reflects a dollar amount. So what you're going to find is that, for example, Amazon may move, hundreds of dollars, like $60, $100, $200 a day. And that's no big deal for Amazon because its price is already priced so significantly. It's almost close to $3,000. Whereas when you're talking about, let's say a company like Uber that's priced at, $30, the shares may turn around and move, a few cents today, a few cents tomorrow, not even a few cents. You'd be lucky to get a few cents. But nonetheless, it's moving like that. Why? Because it's priced so much lower. So you have to understand is that in the end, when you average it out, if you still do the math, and you can easily find all of this information on your apps that you're following, your watch list that you're following. Nonetheless, when you look at the percentage, you'll see that in the end, whether it's Amazon, whether it's Uber, etc., it still moved the same percentage amount. And so going back to the gentleman was saying, I understand the percentage amount. Profit is profit. But he really doesn't understand that, because you have to understand that in the end, I'm trying to let you know that those 10 cents shares to companies, 10 cents a share company is not going to be moving these astronomical amounts, period. And the only thing that's really going to move the stock, period, is whether it's a quality company. And I think that this is the biggest thing that so many people new, especially new into the market, fail to realize that that's what investing truly is. You're investing in real businesses. That the key to profitability over the long run. I'm not talking about some short-term, in and outs that you may get lucky one time in and then turn around and be damned if you could repeat those results again the second time or third time or whatever. And most people can't, if they get into it by luck. The bottom line is, if you want real sustainable profitability in investing, you have to invest in quality companies. You have to make sure that you understand that the company that you're investing in, that you're putting your money to, is a real sustainable, profitable business. And if it's not yet profitable, what exactly are they doing to ensure that they will be profitable in the long run? You understand those things, you will not lose in your investments, period. And then you can now apply what this gentleman just said. If you can get it for cheaper, go ahead and get it for cheaper. But in the end, cheap or expensive, it doesn't matter, because in the end, Amazon price close to $3,000 a share. Tesla price over $1,200 a share is going to get a heck of a lot more movement, than a 10 cents a share company, if because of the fact that the company is not really as quality as it could be or should be. So just keep this in mind. I hope you've learned something. If so, please make sure that you subscribe to this channel. Like the video, it helps my algorithms, help me to put out more content that's going to be helpful to you. And also feel free to share this video to others who may benefit. Take care.